I'm just going to unmute myself here while we're in the preview to tell people to hit us with some questions wherever you're watching. Twitter, X, YouTube, any channels. Hit me with the cues, baby. Don't be shy. Don't be a shy boy. Unless you're from Chicago. Good afternoon. Welcome to Chicago, Future of Finance. I'm Oliver Renick. We got one more trading day into the year. This is the last of CFOF for 2025. Thanks for tuning in and coming along for the ride. This has been a pretty good year overall with stocks finishing out at 6,900 right now. The S&P pretty calm. VIX just above 14. Bitcoin holding the range. The action is in the metals. It's a heavy metal close for the year. Of course, all the action's been in silver, but before that, there was a ton of action in gold, and the move now is extending to copper, which is sort of an interesting story if you think about how each of the metals relate to one another. Gold, kind of that portfolio diversifier, and the most obvious winning trade in my book on my risk radar. It's had the green light for a while. Here's where the risk radar was before stocks broke out. Here's where it is now. Here's where it was. Here's where it is now. Like that. Green for equities, given that we got all-time highs on the index and the futures. Gold's been green for a long time on here because it works in so many different environments. But the silver situation, of course, has been a little bit more on the speculative side of things. I think it's pretty safe to say. The fact that you've had an epic parabolic move, then a pullback, and now firming again, pushing up to the mid-70s. The move in silver is obviously catching a lot of attention. The why is, I think, right now basically just limited to a memification of an asset that now has taken on a new life, like we've seen for a lot of different stocks too. This is the way the market works these days. When people catch wind of a move in an asset, then it can get pretty extended pretty quickly. Then you have the conspiracy theories forming, the excitement, the changes to the market structure and more. but now copper joining in gets interesting because the message for copper is one that typically skews a little bit more traditionally economic, but copper sitting right below its 1-year high. The old Dr. Copper phrase still probably applies because of how we use copper and electrical wiring, not to be ignored. The fact that copper now is joining in, bringing a little bit more of an industrial side to this. We're going to talk about a few of those things with our guests throughout the show. We got Noel Smith, we got Pete Najarian joining, Hans Albrecht, and Charles Moon. We're going to talk a little bit about the small caps as well and some of the industrial trades that might get a fresh look in 2026 if the economy is going to get juiced, particularly if we get fresh juice from a Fed that's going to have a new leader, maybe even more eager to cut, perhaps for political reasons. A fun conversation to have. We're going to take a look at some of the stocks that should be on your radar going into 2026 with Charlie Moon at the back of the show as we close out the session. So stick around. We've got a great show coming up. And we've got a very special appearance by Mr. Noel Smith, who is kindly tuning in from the Alps. No, he's in Vegas, lo and behold. What's up, Noel?
Well, this is Vegas. This is not the Alps.
I know, man. People don't know that you guys have got a nice little spot up there in the mountain. Vegas has got it all. And it looks like you guys got some fresh powder.
Kind of. There's a little bit of snow a few days ago, but whatever. We're doing our thing now.
Yeah? All right. So the reason why I wanted to make sure you called in is, one, to give you some credit because you put on our radar last week that the margin requirements were likely to get changed for silver. I think that's part of the reason why it pulled back. Give me the latest on what you're seeing.
Yeah, the market has a really good way of protecting itself from exogenous shocks like a crazy move in nickel or silver or whatever. So predicting that the CME would increase the margin rates wasn't all that crazy of a call on my end. So ahead of that, what we did is we put on some wingy puts in silver. Now the margin went up a bunch in silver, but not that much to crash it. So the market's still doing fine. Silver's up today.
Yeah, it's a pretty nice bounce. The fact that you've got now this sell-off leading straight into another big rip. Does it look sustainable to you? How are you thinking about this? I know you're an options guy, you're a volatility guy, so the volatility story here is very real. Are you giving any thought to the underlying fundamental story behind this?
What is the underlying fundamental story?
That's what I was saying. I don't know. I think it just got memed.
Yeah, I have no idea. So am I keeping my silver puts? Yes, I am. I'm still short vol in gold, and I'm keeping my puts in silver. Those are down money today, but not that big of a deal because the strike in which I'm long those puts, the volatility isn't moving all that much because the marketplace is still expecting some kind of a move. So okay. I think it's still a good trade.
How long you got on it? What time frame do you think makes sense here? And what would be the action that would squeeze you out of the trade? If it makes new highs, do you go, okay, I don't want to mess with this thing if the Redditors and the meme traders have got control of it?
Sure. So I have March options, which is going to give a little bit of more of a Vega component to it, which means volatility component. So I want some of that volatility compression. So I expect that if and or when silver comes back down, we're going to get a compression in volatility as well. So that's part of my plan.
Okay. The potential for gold and silver to kind of go together, I feel like that's part of where this came from. People saw how well gold did over the last several years, and they're thinking, okay, silver's next. Today, copper's in the mix. We're going to talk a little bit about that as well. But tell me about your trade in gold, because that seems like it could be an interesting kind of pairs trade to put on, because generally they've been moving in the right direction. But if you've got a directional view in silver and just a volatility view in gold, maybe you kind of hedge yourself to some extent on how these two interact?
It depends. Relative and absolute value of volatility is high in gold and silver. So what I have on it in gold is an iron condor in March. I know iron condors in the last handful of trading days have gotten a bad rap, but there's a time and a place for those things. It's a way to do a risk-defined short vol trade. I have no real opinion on the direction of gold, but I don't think that the vol up here is sustainable. Could it go higher? Of course, but I like my trade still.
Okay, so take me through kind of the structure for fading the gold vol. Is that just the iron condor and okay, so that's pretty much where it begins and ends, right? That's just kind of looking for this thing to find a range and maybe get stuck between 45, 4,400 on the futures or something?
So my iron condor is struck, the short strikes are struck at one standard deviation out of the money. So it's
Okay.
pretty wide, and you can go that wide when you have high volatility and still get enough juice to do the trade. So if you do a $10 wide iron condor and you collect, 280, 290, that's still a decent risk to reward ratio. And if it starts to get bigger than that, a whole lot bigger, I can cover for a loss. It's not that big of a deal.
Okay. All right. I think it makes sense. Looking for things to cool off a little bit. I'll tell you what, if you look at S&P vol, it certainly is quite cool there. So the metals are the exception. So if you're kind of thinking about kind of a mean reversion from a volatility sense, the stock market's telling you that the waters are pretty timid.
Yeah. So funny enough, when vol gets super low in equities, what we do is we actually reduce some risk because there's asymmetry there in the sense that we don't think vol is going to go a whole lot lower. And now the timing of it's very difficult, but also with the holiday trade, we actually reduce some of our beta going into this long vol or short vol in equities. And then, so we have net less risk. And then the short vol call within metals is an obvious function of their movement.
Okay, I like that. And I think that to some extent, volatility in gold is not exactly the desired outcome. We kind of like it to be steady grind. For silver, I feel like this is a little bit more of a speculator's playground to some extent. Is that kind of why you've got the directional bias on there? You think people are just playing with fire, trying to play a little hot potato with each other here?
I don't know that I want to be long a bunch. That's pretty greedy. Now, can silver go to $100? Sure, of course, it can go anywhere. But I'd rather have some wingy puts on that don't cost me a lot of money, that have a gob of asymmetry, than a consistent silver long. Now, if I owned it at $16 or whatever, that might be different. But I think that it's appropriate to have on some kind of a long vol silver downside.
I like that. I think that's a fun trade. Also a way to kind of ride the wave without having to get too lopsided in your view on it. Noel, before you cut out, what do you think is possible here for volatility in S&Ps? If bears miss their window here into the end of the year, and it looks like we're going to have smooth sailing economically, macro-wise, could we be plumbing new lows for VIX? I mean, this is a pretty impressive. We're looking at, 5 days now with a 14 handle?
Yeah, I don't think, the next handful of days are all that relevant. I'd rather not have a ton of short vol on here. I'd rather be long vol. And I think that, going into January, this is a really good opportunity to have some hedges on. You can get, I'm not looking at my screens, of course, but you can look at the Jan 25-30 call spread in VIX. That thing can be had for 9 cents. You can put those on in size, and that protects most of your January. To me, that's a sensible hedge.
Okay, love it. Giving us trades from the slopes, Lee Canyon, not a bad little spot. A little
the side of your crash.
Yeah, a little. How close are we? Hey, see if you can find my whoop. I crashed so hard my whoop fell off my hand. All right, be safe out there, Noel. Appreciate the dial in from the slopes. Have fun with the fam. Happy New Year. Nice eyes on the silver trade here the last couple weeks. I love it. The Beauty Haze media in 2026, baby. We're picking up people from the mountain. That's how it is. I think Mr. Pete Najarian, too, is dealing with a little bit of snow here in the Midwest. He's standing by. Let's go straight to him as we do have a pretty good little session here underway. The metal's kind of stealing the limelight to some extent, though. Pete, you warm there? You right? Because you're pretty close to us here in Chicago, and it's not quite as powdery as Noel is there in Lee Canyon, but it sure is cold as hell.
We are very powdered. We just got another drop yesterday of about 6 inches. This morning we got about another inch, and that's all on top of about 24 inches in the previous couple of weeks into this. So we got plenty of snow, man. It's a beautiful white right now, and it started off cold today. It was 5 degrees when I went to the gym this morning. Now it's all the way up to about 18 or 20. So I mean, it's like a heat storm.
So you right? You hitting the you got up to 45 the other week, and I was just cruising around on a Blazer in Chicago. So what, are you hitting the snowmobile, Pete, or what?
I still ski. My knees are not the greatest in the world from football, but I still ski. I used to race as a kid and all the way through high school and all the rest of that stuff. So I was into it, man. And I still like getting out there to Tahoe and places like that. It's real skiing. Minnesota's great, but our long runs go for about 5 or 6 seconds and you're done.
Yeah, a little more maybe across country or just pure ice
Yes.
on our hills around here. Well, I know that Noel is a snowboarder, so he'll judge us on the skis a little bit, but that's okay. Let them do their thing. I don't know what is with the ego with the snowboarders. It's like we're all on the same mountain here.
Yeah, enjoy it, man. Enjoy being out there. And you know what? Don't be somebody who's cutting in front of guys like you and I on our skis still. They got to be a little cool about that.
That's right. Pete, what do you think? Do you want to cut in front of the silver trade, and in which direction? I feel like that's where all the excitement's at, and you've got this situation on the chart where you had this big sell-off. You got a rally back today, but the candle's within yesterday's candle, so you still have this kind of engulfing situation that technically makes it somewhat, I don't know, difficult. Tell me what you're seeing here.
Well, this literally, and I know that you know this because we've talked quite a bit throughout the year, not just in the last weeks and months and all the rest of it.
You've been watching this.
And we've been seeing unusual option activity coming into SLV and many of the various miners and all the rest of it. So this has been a one-year deal. And I'll tell you what, I would never have ever thought that silver would be up 150%. I mean, that just seems ridiculous, but it has. And have we rolled and done smart things every time? No. There are times where we've been in there and had a nice move, and then you take some of it off, you wait again, and you do it again. And that's kind of been what I continue to do now. Even up here at these levels, we still see a lot of call buying. Oliver, it's been absolutely amazing just to see how much option activity we've seen in GLD, and gold's had a great run as well, just not as good as silver. But when you look at silver and you look at the kind of movement that we've had, it's been absolutely extraordinary. And the option activity has not slowed down at all. Matter of fact, this week and the previous week, we started seeing even more buying, but the buying was going all the way out to March. So interesting to see where they're going. And that means, you know what? They don't think at the beginning of the year this is going to just fall apart, because they wouldn't be buying those March calls that are upside calls if they thought that. And it's been extraordinary, and I think you just got to ride it until they're wrong. And so far, it's been a really nice ride.
Love this. We were making a market right here on the show because Noel's saying he's ready to stab short silver, but he also likes to pair short silver with a long vol trade or short vol in gold. But I think that's kind of the fun of this is, looking at the potential for ways, there's more than one way to skin a cat here. It sounds like directionally you prefer long still for silver.
Yeah, I mean, it sounds ridiculous, right? It's made this unbelievable move in 2025, but going into 26, I'm not sure why it can't continue on this move. And let's not forget about this. Silver is used in just about everything that you can possibly imagine, right?
It's a lot,
Gold is not in the same category at all, in my opinion. But you look at silver and you look at all the different various uses for this. I mean, you talk about AI, absolutely. Semiconductors, absolutely. Wherever you want to turn, you're going to find that silver is another piece to the puzzle. So it's not that the people are just buying it saying, you know what, it's a great precious metal, we're going to just go with this. No, people are buying silver because of the fact of the growth. And if you believe in AI and you believe in these semiconductors, I don't know how you could say that it's already over, because I keep looking at these AI chips. You and I probably will have a little bit of a conversation about Micron, because that's one of those that's absolutely been a huge leader, especially in the last couple of weeks where they've come through in a big way. By the way, again, a chip company, you know what? Silver's going to be a part of that.
You were all over Micron, you were all over silver. I think it's a good point on making the tech connection too, because I don't think we're going to look at silver the same for a while after this, just because, when something like this happens, it now kind of establishes itself as one of the inputs, I think, to your kind of trading assessment, your watch list, your process, especially when we see it take on parabolic qualities like we usually see in things related to tech, innovation, high growth, high multiple type equity stuff. But to your point, it is a very real input. If it's going to move like this, then maybe why not be able to extend, and why not also maybe hit copper too? Because even though it may not be quite as integrated into some of the raw tech inputs, it still is very much part of the data center build out. It's connected in the same theme. And now that I see copper trying to fight for 1 year highs, I kind of wonder too if they'll go for that next.
Right, and under those circumstances, and I think you're exactly right. And copper's had this great run, but it's been dwarfed because of everything that we've seen from gold and silver. Right? I mean, it just kind of gets forgotten. Copper's had an absolutely incredible run, to your point, and a lot of use for copper. Right? So I look at companies like Freeport McMoran and others where they make a lot of sense. Are they stretched at all? I don't feel like they're stretched either. I think that they still have room because of the fact of the demand, like we're talking about here, in all these various different other areas out there. Obviously, AI is always something that we talk about, but I think that the reality is, you look at all the uses of copper as well. That's another one. It makes a lot of sense. Could it continue to the upside? You know what? Of course, you're going to have some pullbacks along the way. We see that type of thing all the time. We got that in silver just the other day. Was it a huge pullback? No. It's about 8 or 10% or something like that, and then bounces right back again. So I think that's what we're really seeing here, Oliver, within the markets is, yeah, there's going to be some pullbacks along the way, but the overall direction still looks bottom left, upper right. That's the direction we're going in.
Yep. I'm looking for it on Bloomberg, but I don't see it right now. They had a top story earlier that said picks and shovels is the next stage of the AI trade. I mean, I feel like that's kind of what we've been talking about for the better part of several weeks, if not months. A few of the ETFs we profiled on this show specifically were designed for that. Cooling centers, resources. So the silver copper trade is arguably the same as getting exposure to some of those other ancillary suppliers to the AI theme, and that's what you're saying, right, Pete? I mean, it's all kind of part
Absolutely.
of that picks and shovels. So if that's head page lead story of Bloomberg, then I don't think we're making stuff up here.
And I think you and I talked about this already, maybe last week. But if we did, I think we did. But we talked about all the different other areas that are absolutely something that people have forgotten about. How about Caterpillar? I mean, when you talk about data centers, it's going to take equipment. It's going to take this and that. I mean, Caterpillar has become something that is a big piece to this puzzle as well. And all you got to do is take a look at the growth out of that thing. When's the last time Caterpillar was up 60+% or whatever it is? I mean, absolutely an incredible run, and I think for the right reasons. The use for Caterpillar is there, and there's a huge need for that. So that's one of those sort of secret trades out there for AI, and I think Caterpillar is just another one of those names that makes so much sense in the markets that we're in right now, as people continue to want to build, and the demand is there right now, and it doesn't seem to be slowing down.
Yeah. I just pulling up the Bloomberg headline. I found it here. Videos, article, AI's next AI's trade's next leg is all about picks and shovels. So, and then I think also the verticals. The Caterpillar point is industry specific. I know for some it also resonates, say, in healthcare. There's a lot of different places where I think that you're able to argue this is going to show up next. I've said financial services, I think, is a huge place for AI to find real utility as well.
Yeah, absolutely. I mean, it's something that I think that we just have to expand out. And when we step back a little bit from this, it isn't just about one thing. AI is involved in so many different pieces of the stock market itself. So that's why I've been one of those guys who's been out there saying, you know what? I don't think this is over. I still think there's plenty of time. There's plenty of room. I don't know that there will be pullbacks. There's no doubt there's going to be pullbacks, but I think the general direction is going to continue to be to the upside because of all the different parts of the market that actually AI has a piece of.
Yeah, I'm with you there. Pete, let's talk some economics here for a moment. Obviously, we've got Jan 1st off from the data, but I feel that the numbers have been solid. Chicago PMI, which was supposed to be real low, it came in slightly above today. Not a ton in terms of the news flow today and tomorrow, but it seems like the message from Fed minutes is that they're ready to cut more. Tomorrow, jobless claims should be interesting. But otherwise, it seems like you combine solid data from the last week, even if it's lagging, with the minutes sounding dovish already, and then the notion that we're going to replace Powell with someone that wants to cut even more readily. What say you on what that means for investors?
Yeah, I think that we just have to recognize the fact that January is probably a pause. And then I think when we get into March, really a pretty good likelihood that we're going to cut, at least as of right now. And I think that there's a lot to be said about, all the transformation of the Fed and how things are going to shake out there. Certainly, I think whoever it is probably somebody that the president is pretty convinced is likely going to be somebody who's willing to cut. So I think that that's not even something that we have to discuss. But I think that when we look at the data, oftentimes we look at this, and I think sometimes people don't really recognize the fact that everybody's selling us this bill of goods about all of these different things that are so bad in the economy and this, that, and the other. And the reality is that's not what we're seeing when we have been able to see a lot of the various numbers that have come out. So again, it's one of those things where I think that the media has I don't know if I'd say it an agenda, but certainly their take has been wrong time and time again. And the markets aren't quite as bad a shape as a lot of people were trying to tell us. So I think if we can just keep that clear and keep on with our vision forward, I think that the markets certainly have a great chance in the first quarter of the year. And I'll tell you what, these financials, especially these investment banks, I've been saying it forever. I'll keep on saying it. They are going to crush it again. The demand is there, the M&A is there, and the IPOs are going to be there in a big way.
Yep. Amen. It seems like that's going to be a recipe for this year. You got also Texas Stock Exchange coming online.
Yeah.
So a little friendly competition. And I think that's generally going to, as long as the economy doesn't fall apart, I think you got a lot of companies that are eager to get on the path to go public. And I think that's a pretty fun way. You got SpaceX. We'll see where that's going to go. Pete, let's make sure that we talk a little bit about the dramatic couple of weeks for the Bears. Last we talked, Chicago was victorious over Green Bay, and still, though, it had pretty minuscule odds in terms of what Kalshi was saying for the Super Bowl. But pretty dramatic, unfortunate loss to the Niners. But I got to say, technically, my hometown team from real OG early is the Niners, but I don't really, at this point. Yeah, right. That's true. That's right. Yeah, I'm Central Valley.
Born and raised in San Francisco, man. What? We used to look at the old stadium called Kezar Stadium when people have forgotten that one. That's how old I am. But I'll tell you what, the Bears. That was probably one of the best, most instant classic.
Candlestick was the one I visited.
Oh well, yeah. So you're younger than me. Yeah. I mean, Candlestick, sure. But I will say this, the defense of the Bears has to get a little bit better if they want to get all the way to the big game. I mean, that's just a fact, because that defense gave up far too many yards. They gave up 500 yards, actually 496 if you want to be exact. But that defense for the Bears needs to step up a little bit. The offense is there. Caleb Williams has really proven, I think, to all of us to be an absolutely incredible quarterback in only his second year. And what they've been able to do with the Bears in 1 year, since last year into this year, new coach, all the different things that are going there. But I'll tell you what, one other guy who's a really special player who's not on the Bears is Christian McCaffrey. That guy deserves to be the MVP of this league. What he's done running the football, catching the football, he's nearly 2,000 yards on both of those combined. Actually, he's at 2,000 yards. He's only going to go up one more time. But amazing what he's been able to do, and he really ripped up the Bears pretty good running the football. I think he was somewhere close to 200 yards rushing the football. So just an amazing player, and the Bears have got to figure out how they can stop the run if they really want to win the Super Bowl.
Okay, willing to extend a trade on them. I think they're less than like 6% on Kalshi for the Super Bowl. Again, I feel like a fun trade is just take like the underdogs all at dirt cheap prices. You know what I mean?
Yeah.
Like I don't hate that. Again, like I said, I'm just kind of like dabbling here, but that to me is just, there's still so much asymmetry potential there. Like we're sitting here talking about silver going parabolic. Who the heck knows? Like it's all cut from the same cloth, basically.
Yeah, absolutely. The amazing thing is this year the NFC is just packed. I mean, you look at Seattle, you look at the Rams, you look at the 49ers. The Bears look fantastic. Obviously you look up north of Chicago and Green Bay. They've got some great chances. One of the things that I think that Green Bay has to do is figure out if they can get a little bit healthier before they get into this whole thing, because great quarterback, he's doing a great job, but you know what? When you've got the kind of injuries that some of these teams have, the 49ers are finally healthy or relatively healthy. But they, in this last game against the Bears, they didn't have Kittle, they didn't have Trent Williams, they didn't have Bosa, they didn't have Fred Warner. So they were missing a couple pieces to the puzzle on their defensive side, especially. And that's something that both teams are going to have to step up. If they want to win, Seattle right now has a great defense and a pretty damn good offense. So Seattle's probably the front runner right now, I'm sure.
All right. Love it, Pete. Easy on those knees in the snow. And have a good New Year, sir.
I appreciate it, Oliver. Have a great one, man. Great to be with you.
You got it. Likewise, fun year. Appreciate the contribution on the show. Give John our best into 2026. We'll see you guys on the other side. We got a short little break, and then we got Hans Albrecht joining as we get back to the options flows. He's got some good thoughts on a few of the other trades we teased but haven't hit yet, including small caps. We'll be right back.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
Welcome back to Chicago Future of Finance. So we got about 30 minutes into the bell here. Let's talk more about the commodity move, the heavy metal close into the year, and more with Hans Albrecht, joining us, CEO at Gamma Option Solutions. Hans, great to see you again.
Hey, Oliver, great to be here. Happy holidays.
Merry Christmas. I like that. Like that bull with. Is that a bull with a Santa cap behind you?
It is. We got the bull. The bull's in control. Come on, let's not. I feel bad for the Bears these days. It's Pete's Bears aren't the only Bears that are struggling these days.
Right.
I guess they're not struggling too bad.
Well, they did take a hit in the last week, which is exactly what the market bears did as well. Hans, So tell me, because you had eyes on a couple good things, I think, to preface some of this move. One of them was Micron as a tech leader. We also talked about some of the strength that was showing up in small caps and others. How does the metals move fit into this in your mind? Let's knock that one out, just because I think that has been really the story of the week. Silver, and then now it seems like copper too wants to get in on the action.
Yeah, I mean, some of those moves have been a little bit silly, right? I mean, when you see parabolas like that, platinum, I think, was up 50% in December. So, things are getting into the silly zone. But the way that I see it is that we're starting to see things, and I think there's a big theme across a number of different areas of the market, which is we're moving from the sort of creators of AI to the beneficiaries of AI. But if anyone thinks AI is a bubble in terms of the actual underlying theme, they need to do a little bit more reading. And I see that commodities move as really being kind of a confirmation of the reality that's out there, which is, hey, listen, we can create data till the cows come home because it's bits and bytes and zeros and ones. And but we cannot necessarily create more of the stuff that I can drop on my toe and it hurts. And that's things like copper. And those are the things that we actually need to use for this build out that's going to continue for the next decade. I mean, we are going to continue building data centers as well as upgrading many areas of infrastructure. And that just takes real stuff. So I think that's a recognition. I think it's a positive in the sense that if you're bullish AI, it's happening. And it also goes along with the theme of a real resurgence in the industrialization of the world theme, which I think is very much underway.
That's a big one there. I'm kind of feeling a little bit of silly bone going into the end of the year as well. Not in my trading necessarily, but in that I like the phrase, the drop on my toe and it hurts trade. But that's kind of like what we were talking about with Pete is, we had a great ETF guest on that was making an ETF that has cooling centers and has all these sort of ancillary AI supplier and infrastructure trades. So there's companies that are supplying power, they're supplying water, they're supplying cooling, but the actual inputs to a lot of this infrastructure, I think, is the reason why some of this stuff is getting so much attention and focus, and I think it's quite reasonable, actually.
Yeah, and it really, I mean, it's shortages across the board. So we can go back to Micron. We talked about it at, I think it was around 195, and I said I still like it. Now it's 295. And it's a really great example of how, there are going to be shortages in the world of sort of, let's say, call it pure AI, the semiconductors and some of those types of things, where we just can't get past there are basically three manufacturers that create the HBM memory. And it's not easy to kind of expand that market. You can't just sort of flip a switch and start making more of that stuff. And so what's fascinating is that I think what's exciting about this AI move and this resurgence of in the world of many things that are going to be needed to be created is that I think the market does get it wrong. This whole idea that, well, the market's right at any point, at any given time, the market knows everything. Well, I don't think it does.
Yeah, well, we wouldn't be here. We wouldn't be doing what we're doing.
They said, well, Micron was this sort of cyclical, okay, it goes up and down, it's a boring old stock. And then somebody went, I said, listen, this is a 10 times earning stock and you're not going to be able to buy enough of this stuff. And that's exactly what's happening. People are, the inference phase of AI is very different from the training phase. It is where the gears never stop turning. It literally is the thinking is just constantly happening and you need a lot of memory for that. So that's where the market said, well, this is actually kind of important. So I think we're going to see lots more stuff like that. And I think that's kind of exciting.
Yeah, well said. I think so too. The potential now for silver to become part of our AI discussion is not unreasonable by any means. I was just looking at AIS, by the way, another shout out to Vista Shares, who was on the show, Adam Patty. That was the fund I was thinking of, up 60% on the year for the cooling and data centers trade. The other one, someone in chat today actually was talking about UEC, Uranium Energy Corp, up 55%. I don't hate also kind of any energy play. The nuclear play I feel like might be the one that requires kind of the most to come to fruition as a supportive, trade. Like I would love if we amped up nuclear production. I personally am very pro that. A state like Illinois has a lot of untapped potential for nuclear production. But the thing is, there's just a lot of red tape and pushback still on that category. I don't know if you have thoughts on that, Hans, but it's just, for me, the nuke plays are kind of one step. I think they're in the same category, but they have this risk point to them that some of the others don't to some extent.
They do. And I think from a bullish standpoint, you've got to think that there's certain areas that are going to be what I call non-negotiables, right? So you've got to figure out the situation with rare earths. And even though those stocks have been crushed, I think there's an interesting opportunity there because I think those are areas that can kind of have a resurgence in terms of interest. So I think we're very much going into, I don't think the mania is over, even for those high valuation sort of show me later stories, right? So what we're talking about with commodities is, and if you look at commodities, versus Bitcoin and crypto, you see this massive, massive divergence. And that's exactly what we're talking about today, which is the show me now kind of stories versus the show me later and the moonshots and, well, this might happen and, quantum might happen and help us at some point. But right now we need copper. We need all this stuff.
Exactly.
And so I think what you're going to your point, Oliver, is that you're going to see the administration say, listen, energy is extremely important and we can't drop the ball on this. Rare earths are extremely important. We can't drop the ball. So I think from an investor standpoint, you can kind of have that in the back of your mind going, this is something they need to support on many different levels.
Yeah, no, I think that's fair, and I hope that it'll get there. I think the supply trade is very reasonable in the uranium stocks. They've done really well over the last couple of years. To your point on kind of the notion of this year's big takeaways on needing things now and things having utility, Bitcoin down as much as it is on the year, 10%, even copper up 42% on the year. That one to me is very much the most industrial of all of them. Is there a way to play this for a breakout, you think, Hans? I feel like part of the reason people love silver is just because they saw how well gold did. Bitcoin struggled on the year, so they go, oh, okay, I'll trade this silver thing. And then now I feel like the logical next move might be, oh, well, what about copper? If this thing breaks through technically, it could be off to the races.
That's right. Well, it was, it was crypto over gold, and now we're back to the original Bitcoin, which is gold, and gold's been doing fantastic. So it's sort of funny how things, over the millennia, things kind of come full circle. And I'm not counting out Bitcoin per se. I like certain parts of crypto. I love stablecoin. I think with it, what I'm looking at this year, Oliver, is I'm thinking of those areas because disruption is going to happen on a level we've never ever seen before. There are going to be companies that just completely do a belly flop in this new economy. But there are going to be areas which I think are almost certainties. We're going to have more compute. How this all plays out, we don't know. And the energy you talked about, nuclear, there could be various ways, natural gas, could be various ways we try to get to the finish line in those areas where we have serious needs. But there's no question that it's going to be thinking about, well, where are those areas where we absolutely have to make progress? And I think that's kind of an interesting place. And copper is real, right? So we got this real thing going on. FCX, I mean, that has been my play since the high 30s. Right.
Yep.
And it's starting to play out, right? And they had some troubles there for a little bit. They had some mine troubles, but now it's back in play. It's a very pure play. So I think that's an area where you can probably, I'd say on a pullback, I'd like to see a little bit of a pullback into the sort of the high 40s, mid 40s. And that's where I would start to position a little bit more aggressively again. But that's been a fun one.
Just buying calls or what?
Yeah, buying calls. Sometimes I'll do the in-the-money calls. Now, I've been watching option pricing. So a couple months ago, I mentioned in my communities, I said, listen, options have gotten very, very expensive, and we tend, into the end of the year, we tend to get that compression, which, of course, you've been talking about. We've got this massive, massive compression of volatility. When we say volatility, we mean option pricing and actual volatility, right? Yeah, volatility has disappeared. And option prices have reflected that in getting crushed. So a lot of these prices have come in, which would have been very painful if you'd been long, lots and lots of calls. So I started to actually flip out of calls and into actual physical, and in some cases buying some in the money calls, right? So where you have those in the monies, a little bit less of that time value on there. You don't get those, when you buy the out of the monies, you get that kind of wingy collapse, right? Those out of the monies can collapse quite a bit if you're in the wrong kind of vol environment. But having said that, options are kind of cheap, right? So we talked about IWM, where we sort of a little bit there with this sort of broadening into IWM could be happening. I think that's an area where the options are really not that expensive, especially if I sort of go out maybe 10 months, 12 months. So I think what was extremely cheap number, they're getting cheap again.
DEES 2026 for IWM, maybe September. Pulling those up right now. 248, 250 we'll call it, strike right now. We got 20 basically going for $2,300.
And the thing that was really good with options in the summer was they were underpriced, right? This the 1 year 6 months to 1 years and beyond were underpriced, and you had a lot of reset potential. So one of the ones we played was Google, and I was a bit negative on Google under 200, and then I went full bore. It was my biggest position because I sensed that there was a reset. Micron is another one such stock where I thought the market kind of wasn't seeing what was actually happening there. So, and IWM and broadening in general, if you want to look at RSP and some other areas where it isn't just the top 10 stocks in the S&P, it's the other 490 that now get a little bit of love, right? Because it's that now you have other areas. You see it out there. You see, Pete talked about the financials. Goldman's been one of my big picks as well. Sounds like he's loved it for a while, where this is done well because what do? Well, they're not an AI company, but they are an AI company, just like many companies, because they're going to use AI, they're going to save money,
Sure.
they're going to cut costs in a number of areas.
Fire a bunch of first-year analysts, treat them even worse. Just treat them like dirt.
Well, Goldman is that's the vampire squid. No one ever likes it, but the problem is I like to invest in the smartest guys in the room, and that is figure that out. But it's a great example of how AI starts to help other areas of the economy, and then as we see this big push into the physical aspect, which a lot of people are thinking this 2026 is going to be the year of physical combined with AI. That's what's gotten into Tesla a little bit lately. That we're going to get these humanoid robots, we're going to get self-driving is going to be a little bit more of a sustainable trend, et cetera. So can we combine these two things? I think that's a little bit trickier, but I think there's a lot of potential for that.
All right, Tesla pulling back to 450 looks like an area that should be some support. Sell a put, rip a call. Last thought, Hans? What do you think for Tesla?
Yeah, I mean, I think you can do maybe some call spreads. I haven't looked at the option pricing in about a week, but you want to definitely be a little bit careful. We can remain sort of choppy over the next couple of weeks until we start to find a little bit of direction. And one mistake I see option traders make is they look at option price and they go, well, that's cheap, but guess what? It can get cheaper. So I want to see that trend I want to see movement start to pick up. I want to see option pricing start to actually stabilize, because the trend of option pricing is one of the most underrated things that people look at. Cheap can get a lot cheaper, but and I don't have to pick the bottom, but as I start to, you want things to be aligned with your viewpoint. And when things are starting to move you have a few things moving in the right direction, I don't mind paying up at that point as long as they're still not super, super expensive. So I'm waiting for that kind of shift, that signal that the market is starting to pick a direction. And then that's when I think you can start positioning into Tesla calls and things like that.
All right, nice. Well, we took a breather here the last couple days, but seems like that's a fine way to close, right near all-time highs. Hans, thanks for the contributions this year. Good eyes on Micron and others. Appreciate it very much. Happy holidays.
Happy holidays, Oliver. Take care, everyone.
You got it. Hans Albrecht, CEO at Gamma Options Solutions. 2-minute innovator buffer break. Then the one and only Charles Moon takes us into the closing bell with his top stocks to watch going into next year. Be right back.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% trap? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
Welcome back. I got Mr. Charles Moon standing by, ready to jump in and talk some picks for 2026. CM Charles from Prosper Trading Academy, of course. What's up, Charlie?
What's going on, big brother? How you doing?
Man, I'm kind of ready for this new year, you know? It seems like the market is too. It's a pretty quiet day, which is why we've been talking metals nonstop. You think this is a fad, or are we going to be talking metals into 2026?
Well, the trend is your friend, right? And the trend in the precious metals remain very strong. We talked about it yesterday where volatility creeps in at the highs. That's usually where the pause kind of comes in, a little bit of uncertainty. Basically, they're just going to need another blowout, breakout to kind of give confidence back to the markets. Excuse me. And in that sense, I don't see the trend breaking just yet. It still remains to be the play, especially in the commodities world, especially if there's uncertainty about the overall markets. People are parking their money into precious metals. I don't see that changing, not anytime soon.
I mean, the gold move has just been like permanent, you know. I think that's where this all starts, really. If I try and get into the mindset of why maybe the everyday person who hadn't really put much thought into something like silver or copper in the past might be thinking about it now, is because gold is the leader of this group, and it has been jamming for 3 years, basically no matter what happens. So that part to me, I feel like, is where this story begins, and the chart still looks pretty darn good to me.
Yeah, and 100%, without a shadow of a doubt for me, it's become a strong momentum play with a lot of retail traders. People are looking at this as an asset that's providing good return in a highly predictable scenario for the most part of the year, especially a year where we've had a lot of uncertainty and some fear. People got really hurt on that deep pullback in the start of the first quarter, second quarter, and we're scared to get in on the recovery. But once they realized the recovery was in play, market obviously has marched up to the levels that we're basically trading at right now. For me, gold has been very sustainable, and people have discovered that gold has been very sustainable in terms of performance. So I just don't see people veering off of something that's either helped them salvage their year or made their year. You know, just like there's a lot of love and a lot of demand for certain names like Nvidia or Apple on a consistent day-by-day basis, I really believe you have to put gold into that same category. I don't see any reason to veer from the actual trend of performance.
Don't fix it if it ain't broke. Kind of sounds like what you're saying, basically. And it's hard to break gold, I think we've learned. Inflationary environments, inflation coming down, crypto working, crypto not working, stocks rallying, stocks not. You know what I mean? You got to stretch the chart out on gold beyond really 5 years to find anything meaningfully soft. I guess we could say 2022, in the midst of the Fed hikes, gold got hit, and that's what I got pulled up here in the middle of my screen from March 22 to October. But, you know, everything pretty much got hit at that point, and 17% wasn't too bad. You know, we had bear market in stocks, we had big blow up in high growth stuff, so it's just a pretty impeccable track record. I just think people should know that something like silver is more likely to have a bumpier, more volatile ride. That would be my 2 cents, silver cents, or copper.
Yeah, you know, you mentioned it yesterday. Is silver playing more of a catch-up game? Is this going to be sustainable? And I think the conclusion that we both came with is that if gold remains a powerhouse, there's no reason why that couldn't be the sympathetic trade. Is it possible that silver at one point garners a lot more attention? Case in fact, it's more of this week that we've seen a lot of attention on silver. There's been a lot of the social media trends. There's been a lot of these AI bot videos that people tend to believe are real, talking about the squeeze in silver, but truth of the matter is performance and demand is demand. And with how aggressive the retail trader has been over the last year or two, you know, if the large collective really wants to get into silver, we could certainly see that take over in periods of dominance over gold, just because it's a lot cheaper right now. The contracts, even though the volatility is up, is still a lot cheaper than buying into gold contracts. The shorter dated options also make it extremely attractive for the day traders that are looking to be actively pursuing something in this market environment that just really isn't providing much. And so this is where we could see pockets of dominance come into play for silver.
You know, I want to. I think that I want to connect silver to tech because I think that's very real. And I also want to talk about this upcoming year. And I know you've got a lot of tech as basically your favorites. Charlie Moon's top 3 going into 2026: Netflix, Oracle, Meta. I get those right, Charlie?
100%.
Okay.
It's rare that you see these big names trading underneath their 200-day moving average. All 3 of them are at this point right now. I think the big thing with Oracle that's not being mentioned is the fact that they have finally taken ownership of TikTok. I think this is something that is going to be more of a tailwind than a headwind.
Count me
The
in,
headwinds
baby.
are really.
I'm long
the
TikTok.
headwinds. When we look into the headwinds of Oracle, right? They announced these outrageous forward booking numbers that Wall Street finally realized can't come into fruition unless they get the ability to power the data centers to provide the opportunity to make that revenue. So unless there's some sort of jump in technology, which at this rate it could come overnight, to be able to power that opportunity, well, there's got to be something that's going to give investors a little bit more demand or confidence into Oracle. So all this talk about the data center, totally understandable. The market priced in that future. They quickly corrected their mistake. And now we have to say, well, what can TikTok possibly do for Oracle? On the flip side, you may think that now TikTok having a stronger foundation in the United States would be a negative for Meta. That's not going to be the case because Meta has produced record numbers, even though TikTok's competition and growth has jumped exponentially over the last year and a half. So it's not like Meta is losing their dominance. You know, their MAWs and DAWs are still going higher on a monthly basis, on a quarterly basis. Their revenue is still jumping. They're expending more, obviously, but Wall Street seemed to like this newest acquisition of Magnus. And then ultimately, you know, if we look at the social media world, well, when one thing is shared on one platform, it's essentially shared on all platforms. And so if one company is making money off of it, well, that content is generally going to be shared, and it's also going to provide a return on other platforms, just like it would on TikTok and Meta. So, you know, I don't really worry about what Oracle's, new position as ownership of TikTok would do to Meta. I think that they're going to be competitive players, but they're going to be the dominant players, and they're certainly going to keep crushing it in 2026. With Netflix, it's just a matter of history. This is a stock that has swung up and down significantly off their highs and their lows.
Pretty big pullback since June.
Yeah, but that's the thing. You know, they're still the dominant player in the content space. They're trying to grow that dominance. They've single-handedly killed the movie theater industry, and I don't see this changing.
Hey, Tom Cruise is putting up a fight.
Yeah. Well, I mean, think about it like this, Oliver.
Netflix versus Cruise.
Well, hold on. If Netflix gets a hold of this deal and actually can now utilize that library without having to pay an arm and leg like Disney had to,
Yeah.
more so that they're now veering into sports and making a bigger presence, for their name in sports, and we know the type of revenue that sports viewership can bring in. This is where I believe that Netflix real growth cycle on top of their ad rev is really going to come into the picture as they push more into the sports industry. So
I think we
just
need to see how many people
radar-
signed up for Jake Paul and Anthony Joshua, because they're just lighting money on fire to bring these guys on. Enormous payouts. And I don't know, are that many new people signing up to watch the thing to justify paying them each $20 million or whatever? I mean, I guess Netflix wouldn't do it if they didn't, but I wonder how many times that trick is going to work, especially when they go the way they've been going.
No, and that's a great question, but that revenue isn't necessarily dependent on being new revenue. It's more about sustainable revenue. And the longer that they could keep their client base continuing to pay that monthly basis, they're now still obviously working on margins. Margins are improving. And again, if this takeover does take place and they do push into the sports content world,
That
especially
part's
live,
huge for sure, the real stuff, the football games.
that ad rev is pretty juicy and pretty tasty.
Yeah, no, that's very true. And also to your point, the cheap library as well. I've been watching Shameless for the first time. I got kind of addicted, hooked on that. Somehow I missed that for like 15 years or however long that was out. William H. Macy's ridiculous. But it's just, it serves as the base, because like I've gone in and out. I've gone in and out of other platforms. Like I've gone in and out of Paramount or whatever, depending on a show or something. I've canceled it, because I hate watching ads. So it's very difficult for me to take the low bar ad. What I'd rather do is take the high bar than cancel it when I'm done watching something. But it's really hard to get rid of Netflix because it's the big basket of stuff. When in doubt, new Chappelle stand up. All right, boom. It's got the staples. It really does feel like, the core of television today for sure. It's your main line. It's your baseline.
Yeah, 100%. And
And
what
it's
you said is
30% off
correct.
highs.
No, it's pretty funny that you mentioned this. I've canceled multiple subscriptions, but the one that I've been able to hold and been willing to pay at a higher tier has been Netflix. And so that's just kind of that buying power, that loyalty branding. It's things that are associated with names like Apple that makes them so dominant. This is a name that's, we talk about Meta in terms of, communication services. I don't know if Netflix really kind of fits into that category, but ultimately they are the conglomerate in media right now. And, for me, anytime you're a king of something, like king of cloud, which is Amazon, right? Obviously e-commerce. And then we talk about communication services, that's Meta. We talk about consumer discretionary, we're talking about Apple. Netflix fits in that category as being the king of media. I just don't see how they're going to hold this lower price point for much longer without actually moving higher when the market starts their 2026 rally.
Yeah, no, that's fair. I think that too, if you're bullish on the market, it's hard not to think, and the economy too, it's hard not to think that Netflix is going to get back on its feet. I'll end with, I was trying to find the tweet, but I couldn't. My favorite post of the day, since you mentioned Oracle, was a list of the richest people, and it said, imagine being the third richest man in the world, and you're not even the richest Larry, because it's Larry Page number 2 and Larry Ellison number 3, which is just hilarious. Charles, appreciate it very much. Thank you, sir. Good ideas for next year, and good eyes putting stuff on our map and our trading plan for this year. Happy New Year, Charlie, to you and Scott.
Happy New Year, brother.
See you on the other side. Charles Moon, Prosper Trading Academy. It's good to be king of something, the king of content, Netflix pick into 2026. Thank you for joining Chicago Future of Finance in 2025. I'll see you on the other side in 26 next year. Have a great New Year's. I'll see you next week.